Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 yo, go, go, go. Hustle hard, hustle every single day. I'll be making moves till I'm buried in my grave. To the system, I don't wanna be a slave. I've been doing shit my way, or the highway. And in the driveway is a nice range, cause I grind through the climb, I invite pain. You'll never hear me, bitch, nah, I don't complain. Just gotta flip the switch and you can go and obtain anything you want, anything you need. Your mind's got the key ingredient, it's belief. They'll deceive with the negativity, but I just slide right by that energy. Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 go.
What's up everybody, Soil here in another scalping strategy lesson. In today's video, I'm going to teach you an amazing scalping strategy that is run on 1 minute time frame. It's very easy and highly profitable strategy only if you pay attention to all the points that I'm going to explain in this video. Just make sure you watch this video until the end so you won't miss any important point. Alright, in the first step, we must choose 1 minute time frame because as I said, this is a 1 minute scalping strategy. So here we set the chart time frame on 1 minute. In this strategy, we use Heikin-Ashi chart. So here we set the chart type on Heikin-Ashi. This is the price chart of euro to US dollar, but there is no limitation on the asset or market, and you can choose any other asset, whether it's forex, crypto, or stocks. The only requirement that we need for this strategy in terms of market or asset is trading volume and liquidity. This is a scalping strategy, and we're going to open many trades in a single day, and the profits that we're going to take are very small in terms of price movements. So we don't want to experience unreal price gaps or large spread between bid and ask prices, which are caused by insufficient order book, because this can damage our trade entry, stop loss, and profit. In this strategy, we have two indicators, Bollinger Bands and Awesome Oscillator. For adding indicators, here we click on indicators and we simply search the name. The first one, Bollinger Band, this one, and we must change its settings. Here for the standard deviation, we set it at 3. So the upper band and lower band of the Bollinger Bands will be 3 standard deviation from the middle band, which is a moving average with length of 20. And the second indicator that we should add is Awesome Oscillator, this one. And we use it with default settings. Everything is already set on the chart, and before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, now let's see how we trade based on this scalping strategy. As I mentioned earlier, the middle band of the Bollinger Band is a moving average with length of 20, and we set the upper band and lower band 3 standard deviation from the middle band. As you know, one use case of Bollinger Bands is for identifying overbought and oversold condition in the market. When the price reaches to the lower band, the market is considered to be oversold, and when the price reaches to the upper band, the market is considered to be overbought. This fact is based on a statistical principle which says that about 95.4% of the values are within 2 standard deviations from the mean, and 99.7% of the values are within 3 standard deviation from the mean. The more the distance from the mean, the lower the probability for the value to fall in that range. So reaching to beyond 3 standard deviation from the mean is considered an extreme level, because 99.7% of the values are statistically between these bands, which are placed 3 standard deviations from the mean. So when the price goes beyond the upper band and lower band of the Bollinger Bands with the settings that we have made, which is 3 standard deviation from the mean, there is a high probability to have reversal of the price. Please pay attention, we're talking about probabilities. The price can go beyond the band and continue that way, so we need more confirmation for any trading decisions to lower our risk. So in this strategy, in the first step, we must discover areas where the price goes beyond the upper or lower bands. It can be a close beyond the band or just a shadow of the candle. For example, here you can see that the price went below the lower band, which is considered an extreme level for the price to reach. So there is a possibility to have a quick reversal reversal and advancing of the price. To confirm this, we must take a look at the awesome oscillator. When the awesome oscillator turns green, actually the bar closes green, and at the same time the Heiken Ashi candle also closes green, it gives us the signal that the price is gonna advance. So here we can enter a long position as the new candle opens. Please pay attention, if the trigger candle, the green candle for confirmation, is a doji or very small candle, it's better not to enter a trade. And also confirmation of the awesome oscillator and Heiken Ashi candle should not be late, not more than 4 or 5 candles after spotting the extreme level. Placing stop loss for this trade depends on the situation. The extreme level or Bollinger Band, whichever that is closer to the entry price, we place it below that level. If you feel it's very far from your entry price, you can set it tighter, and if you think it's very close to your entry price, you can set it wider. As I said, in this strategy, place of stop loss really depends on the situation of the candles, the extreme level, and the Bollinger Bands. And for the profit target, we set it in advance, and we take the profit at the level that make the risk to reward ratio equals 1.5. Moving on the chart, here the price, as you can see, reaches to the upper band of the Bollinger Bands. Didn't pass it, but still can be considered extreme. In this case, for opening a short position, we enter a trade when the awesome oscillator bar turns red, and at the same time, the Heiken Ashi candle also closes red, which is not the case here. Moving on the chart, here the price went below the lower band of the Bollinger Bands, and the awesome oscillator turned green after 4 candles. But we have a doji, so we don't enter a long position here, and as you can see, the price declined more, and here again it went below the lower band. After 4 candles, here the awesome oscillator turned green, and at the same time Heiken Ashi candle also closed green in a good shape, so we can enter a long position here as the new candle opens. The stop loss for this trade can be placed below this low, and profit target at 1.5 risk to reward ratio. One point that I must mention here is that in this strategy, you can show flexibility. In this strategy, you can also show flexibility depending on the market condition. For example, here it's obvious that the market went to a range, and this strategy works very well in trading ranges. So here it's true that the price didn't touch or pass the upper band of the Bollinger Band, but it's very close and we can consider it extreme level. Here the awesome oscillator turned red after 4 candles, but the Heiken Ashi candle is a doji, which shows indecision. We can wait for another candle to see how it is and if it shows any selling pressure. We can see that it's not bad and kind of showing selling pressure, so we could enter a short position here as the new candle opens, with the stop loss placed above the extreme level and the profit target at this level. So depending on the market condition, if you can show flexibility, do it, but be careful not to decide based on your emotions. If you're not an experienced trader, better to stick with the rules. Moving on the chart, here the price went below the lower band, but very late signal from the awesome oscillator, so we don't take any action for long position, and the same situation happened here. Now we come to the most important part of this strategy, risk management. This is a volatility-based strategy, and we enter a trade whenever the price reaches to an extreme level regardless of the trend. So this scalping strategy has higher risk in compared to a trend following strategy. And besides this, we are using a scalping strategy, and you're going to actively trade in a day. If you don't manage your risk properly, you can send your account to zero faster than what you think, because it's impossible to win every single trade, and losing trades are part of the game. So you must exactly determine how much you will lose if the market suddenly turns against your position. For active trading such as scalping strategies, there is a risk management strategy that is called 1% rule. I have a complete guide on this. The link is also placed in the description of this video, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot successfully and profitably run the scalping strategy that I explained in this video. Not only for this scalping strategy, but for any other trading strategies that you want to use, it's really important to manage your risk properly. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.